In the most recent stage of the pandemic, the focus is on one chart, one that shows the rate of vaccination by country. Daily updates add to the drama of seeing which country is the fastest to vaccinate. Thanks to these programs, it's very likely that national and local lockdowns will become a distant memory and pressure on health systems will ease. After a disastrous 2020, the UK now appears to be doing pretty well, which came as a pleasant surprise to almost everyone. The vaccination rates are higher than the USA and the EU, and the resulting optimistic mood is now being carried over to the economy. The latest Purchasing Managers' indices show that expectations for the manufacturing sector are at a 12-month high, and expectations for the service sector are only just below a 12-month high. These positive signs came at a time when the country is still in a national lockdown and large parts of the service economy are still lying idle. If the economy opens up, they expect optimism to continue rising. Consumer confidence is now just below its pre-September 19 level and surprisingly has risen during the current lockdown. House prices continue to rise and savings have increased. In short, the nation has become more confident and has money to spend. This brings the whole thing to the monetary policy. The Bank of England's most recent meeting of the Bank of England's Monetary Policy Committee, the MPC, recorded that since February, when the last monetary policy report was released, the economic outlook has improved in several ways. The UK economy in particular has developed more strongly than expected. British fiscal policy is more supportive, US fiscal policy is far more expensive than forecast, and the global economy was stronger and oil prices were higher. It is therefore likely that when the MPC releases its next report in May, it will raise its outlook for both UK economic growth and inflation. The Bank of England's primary mandate is not to let inflation rise above 10%. This is now somewhat different from the US monetary policy stance. The US Federal Open Markets Committee's Price Stability Index is defined as the average inflation rate of 2%. The difference is subtle, but it means that if inflation rates rise with the same profile in both countries, the Bank of England's mandate will result in the Bank of England being the first to consider tightening monetary policy. Undoubtedly, it is good news that the success and effectiveness of a vaccination program will allow economies and nations to recover from a disastrous year. But as a result of this upswing, the central bank could begin to move away from their low emergency interest rates. Given the UK's economic expansion and the Bank of England's mandate, it's not out of the question that it might be the first central bank to do so. And not forget the numbers I just cited are looking good, but you have to see in comparison to what. Because last year we know what happened in the UK, how the government dealt with it. So it's easy from that level to come out looking well at the moment. So we really have to see what will be there in the end compared to the years before and not compared to the disastrous time in 2020 when UK was on the places far behind many other countries, and that only changed now. So it will be interesting, and of course that is just one side of the medal. The other is called Brexit, and there we will see much more to come. And if you want to stay informed, please subscribe to my channel. Auf Wiedersehen.